Good afternoon, everyone. I think today is a historic day because this is the first time in the Indian history that a chartered accountant presented the finance bill. Before that, it has never happened. And the budget is important because of the fact that it is the last budget of this government, and it obviously lays a lot of importance on what they have done so far, but I think it also becomes a guiding light for the new government because of the matter of continuity. We have seen governments picking up from the last budgets. It was, contrary to the normal conviction where we have interim budget not touching on a lot of policy matters and being more on the mundane expenditure and revenue thing. I think government has moved ahead and taken some important decisions. Some of them may have a long term effect, and some of them it is immediate. So from the immediate point of view, we have seen some relaxation coming from the income tax front by relaxing the limit on the the middle class people earning up to 5 lakhs. There is a exemption on the TDS, which used to be deducted, and it used to be a big hassle. There is a direct benefit transfer, which we are talking of to the farmers up to 6,000 rupees. It's not a large amount if you look at, but it involves a lot of procedural work which need to be done before you can see whether it reaches and how efficient it is, and these amounts can always be increased, and many of the subsidies which are coming can be consummated in that. So I look at it more of a procedural thing which is in the right direction rather than the absolute amount, though 6,000 per year is also not a small amount, so to say. Overall, if I look at how will I look at this budget in a very nutshell, other than the political rhetoric which Finance Minister was emphasizing on, clearly there is a balance between boosting the economy by consumption and supporting that consumption, while at the same time trying to be as fiscally prudent as one can be in the present environment. And I think that balancing act has been done quite well. 3.4% fiscal deficit when you're growing at 7% plus, I think is sustainable. But the rub effect of that consumption which will have on the broader economy, I think you can easily see your GDP increasing by at least 0.5%, so which will be a huge boost to the economy. And of late we have seen for last couple of quarters, we saw the consumption slowing down because of various reasons. I think that will get a boost, and we have to be conscious of the fact that India is a consumption-led economy. We are not a manufacturer, we are a consumption-led economy. And from that matter, from that angle, I think looking at what government is trying to do is quite good. Now, of course, one need to look at what is the implication of this, on the broader markets. I think all that, which is focusing consumer, I think that all will get a lot of boost from this going forward. And somewhere, the stock market for the time being, I look at it is bottomed out, and will have some amount of rebound. I'm not saying that you will not have volatility going forward. Yes, the volatility will be there because you are entering into an election phase. I think somewhere around 20th February you will have model code of conduct being implemented. But I think some of these things which have longer effect on the economy, I think will support the market. As I just said, that anything which is consumer facing, so whether it is discretionary side, non-discretionary side, I think will have support. At the same time, we are also seeing a trend in the corporate lenders where increasingly the balance sheets are getting repaired. We saw a couple of banks moving out of PCA yesterday. I think that all will give a lot of impetus to the market, and as I'm repeating myself, I think it will be right to say that the market has bottomed out for the time being. But that does not mean that you just go and start buying anything and everything. You need to be pretty conscious of the fact, because there is a volatility around and it will give you decent entry points. Having said that, if you look at 3.4% budget deficit is not that bad for the fixed income side as well. The entire supply demand dynamics does not change. It is on the expected line. Yes, the one thing which the fiscal with the fixed income market does not have clarity right now is the fact that there was a lot amount of OMO purchases which RBI did, which right now there is no clarity, but I think we need to wait out. But overall, if I look at roughly 4.75 lakh crores of net borrowing, I think it's a manageable number. It is in line which what market was expecting. So I think somewhere around 7.30-40 on the 10-year, I think it's a reasonable number. It is anchored. We have a monetary policy coming up soon. I think that will be more guiding force for the fixed income market. But I think looking at what has happened in the recent times in the global economies and how the global central bank like Fed and others have reacted, I suspect that RBI will also go on the accommodative side and may change their stance, which will further fuel consumption, and again coming back to the equity theme of consumption-led growth, and everything which is facing consumer could get a lot of boost, including it is both for the rural as well as the urban population. I think for the time being, the portfolios should be overweight on these kind of things, and that's what we are trying to do in our funds as well. Yes, you have to be slightly nimble because the volatility is there. We really don't know what kind of outcome will be there in the election. So we have to be prepared for that. But I think for the time being, there is a lot of things which has been put to rest by this budget, and I'll rate this budget from the policy initiative quite high. That's it, which I wanted to share with you guys on the budget.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.